Welcome to Keys Open Doors. Today, we're breaking down employer-assisted housing programs. I am absolutely thrilled to guide you through this today because, honestly, we're looking at one of the most powerful, yet somehow completely overlooked tools for aspiring homebuyers. Now, if you're struggling to save up for a down payment, you are definitely not alone. It's tough. You might look at your budget and think, yeah, I can afford a monthly mortgage payment, but scraping together that massive lump sum of cash for the down payment and the closing costs, right, that's the real barrier. But what if the solution wasn't just picking up a side hustle or a second job? What if a structural solution was waiting for you right where you already work? Well, let's dive into exactly how these solutions operate in Section 1. What is EAHP, Employer-Assisted Housing Programs? Okay, let's get right into it. EAHP stands for Employer-Assisted Housing Program. Looking at prime examples of municipal housing initiatives across the board, an EAHP is basically a program, typically backed by a local government, that offers serious financial support to its own employees. We're talking loans and grants here. The whole goal is to help public servants bridge that gap to homeownership by covering those pesky down payments and closing costs. It's essentially an incentive to help the people who serve the city, actually afford to live in the city. Now, just to be clear, you can't go out and buy a massive investment property with these funds. These programs are strictly designed for primary residences. So eligible properties usually include things like your first single-family home, a condominium, or a co-op unit. The big idea here is to plant roots and build up communities, which is exactly why the focus is squarely on getting you into your very first primary home. Okay, to really grasp the power of this, we need to translate some of that heavy financial jargon into plain English. You'll often see the main benefit described as a deferred 0% interest loan. But what does that actually mean for your day-to-day budget? Well, deferred just means you don't have to make any monthly payments on this specific loan right now. It just sits quietly in the background, and 0% interest means that balance is never growing. So if you borrow $10,000 today, you only ever owe $10,000. There's no compounding interest and zero immediate strain on your monthly cash flow. Pretty great, right? So, what does this actually look like for your budget? Let's check out Section 2, the core financial benefits, specifically looking at the standard employee tier. The sheer amount of leverage offered here is literally a game changer. As a standard eligible employee, you can access a maximum loan amount of up to $20,000. I mean, that is a substantial injection of capital that goes directly toward your down payment or your closing costs. It effectively bridges that massive savings gap that keeps so many renters stuck renting when they really want to buy. But believe it or not, it gets even better. On top of that deferred loan, there's also a matching grant. Many programs will actually match your own savings up to a maximum of $5,000. And remember, a grant, unlike a loan, is money you generally do not ever have to pay back, as long as you follow the program rules. So this program essentially multiplies your own hard-earned savings, giving you a huge boost when you sit down at the closing table. Now, the absolutely crucial point here is that these programs often completely remove the typical hurdles that trip up buyers in other assistance programs. First off, there is frequently no income cap required. So whether you're an entry-level clerk or a senior manager, you can apply. Second, there's usually no strict minimum cash contribution forced on you by the program itself. You do need to keep in mind, though, that these incredible benefits are subject to available funding in the municipal budget, so time is definitely of the essence. But wait, it actually gets even better for certain vital community members. Let's move right into Section 3, First Responder and Educator Perks Enhanced Benefits. If you happen to be a teacher, a police officer, or a firefighter, the municipal benefits dramatically increase. Imagine, say, Sarah, a local public school teacher. While a standard employee gets a matching grant up to $5,000, an educator like Sarah can see that match skyrocket to $15,000. Furthermore, she's eligible for a $10,000 recoverable grant bonus. That is something standard employees just don't receive at all. We're talking about a staggering amount of extra localized support for our public servants. Of course, whenever there's significant financial support on the table, there are going to be rules attached. Which brings us to Section 4, the fine print explained grants and repayments. So, to keep that special $10,000 educator or first responder bonus as a true grant, meaning, free money, you do have to fulfill a 5-year service and residency obligation. It's pretty straightforward. In year 1, you buy, move in, and keep working for the city. By year 3, you must still be living in that home as their primary residence and still be employed by the local government. And once you hit that 5-year mark, your service obligation is officially complete, and that $10,000 is yours free and clear. And honestly, This brilliantly illustrates just how flexible yet protected these municipal funds are. If life changes, say you get a new job in the private sector in year 3, or you decide you need to move out, you don't suddenly owe a $10,000 penalty check the very next day. Instead, the grant simply converts into a deferred zero-interest loan, exactly like your initial assistance. Now, all this brings up a super vital question for any buyer. When do you actually have to pay that baseline deferred loan back? Since we already established there are no monthly payments, when does the bill finally come due? Well, the repayment is tied to 3 very specific triggers. You only have to repay that zero-interest loan if 1. The property is sold or transferred to someone else, 2. If it is no longer your primary residence, meaning, say you decide to move and rent it out to tenants, or 3. If you do a cash-out refinance to pull equity from the home. So really, if you just live there quietly for 30 years, you will not make a single payment on that secondary loan until you finally decide to sell. It is incredibly buyer-friendly. All right, now that we've broken down the mechanics, the money, and the fine print, let's look at Section 5, your next steps, unlocking your path. First things first, you need to set realistic expectations for your housing search. Programs like these usually stipulate that your main mortgage, your first trust's loan amount, cannot exceed the Federal Housing Administration, or FHA, conventional loan limit for your local area. This simply ensures the program is supporting standard residential homeownership, not, luxury estates. So, you'll definitely want to check the FHA limits for your specific county to know your maximum purchase price going in. If you work for a local or municipal government, your absolute very next step should be a quick conversation with your Human Resources Department. Ask them directly if your employer offers an employer-assisted housing program. And hey, even if you don't work for the government, many large private universities and hospital systems offer very similar benefits. But you won't know unless you ask. And as your trusted home buying educator, I do have to remind you that this explainer is strictly for general education. Every single local program has its own specific quirks, rules, and funding limits. So you should always consult licensed financial and real estate professionals to navigate the nuances of your very specific, individualized situation before you sign any contracts. It's a pretty empowering thought, isn't it? The very place you dedicate your time and energy to every single day might just be holding the financial key to your first home. By understanding how deferred loans and matching grants work, you can absolutely turn what feels like an impossible down payment into a totally manageable reality. Keys open doors, helping you unlock your path to home ownership. If this helped, like, comment, and subscribe.